$44 silver by Christmas. That'll be my first question for our guest today, John Lee. He's a respected voice in the precious metals community, and he's the CEO of a silver mining company, Silver Elephant Mining. John, welcome to Ron's Basement.
Hi, great to be back at your show, Ron. I think this is our third acquaintance so far.
Well, it's great to have you. I watch all the videos that you put out. You have great insights into the silver price. So if I ask you that question, John, I'm predicting we could get to $44 silver by Christmas. Am I crazy, or is it possible?
Well, I think that's a bit of a belated forecast. I believe last time we talked, or not so long ago, 3 months ago, when silver was $32, the gold was barely $23.50, $2,400. And in the blink of an eye, gold right now, we're printing almost $2,700. Yet silver is still struggling to break out at a $32.50 handle. It's been a couple of reasons. We talked about our last broadcast is China is going through in the last 18 months what's similar to what U.S. has gone through in the financial crisis in 2010. There's a complete collapse of the real estate market. And I was actually just in China for business related to Silver Elephant, and the slowdown is very evident. And I was in Beijing and other second-tier cities that still, boasting population of close to 10 million people. And it's a very somber tune that I am singing, and also a very clear separation of the East versus the West. Like, for example, Google is complete ceased to function. The Google Maps, the Google reviews, just the Google of everything is stopped working there. And it's almost like everything stood in time from it was right before COVID of the places I visited. And there's no review since 2020. And it just seemed like everything stood still from it was 5 years ago. And all in all, China is one of the biggest silver consumer in terms of industrial applications, and also one of the largest silver producer because a number of major silver smelters are based in China. So I think a lot of that laggard in silver has to do with the slowdown in the Chinese economy. And sort of moving forward, and the fate of the silver again would then rest on quite a bit on what's going to happen with the decision made by the Chinese echelons above, whether they choose to reflate economy by printing more, or they more continue to continue their path of a deep reform, right? The judge is still out there. I mean, they could do something that the United States can never do, because the elections comes every 2 years on the Congress and 4 years on the presidential. So I don't think it's out of the question. In fact, Ron, I will go one step further and say that if silver were to make a run past $32, and if silver were to go past $32 for, say, more than 10 trading days for 2 weeks in a row, then the silver market is clear to challenge 50. I don't think there's much resistance between 32 and 50. And I'll go further to say that if silver were to make a run, it will likely run between now and November. And the reason is, I think gold is really already reached my target of 2,800 from the top and bottom handle, the bottom being, the neckline being 2,000, the bottom being 2015 low of 1,200. So if you were to extrapolate down to the other side, then the target is 2,800. That was my target at the start of the year. So the run for gold, if it is any sort of a conventional run up, then gold this gold bull market is already long in the tooth. And then if you look at the oil price and the copper price and the silver price are still a bit of a laggard. So either gold stays where it is and then silver play catch up, or you might see a correction in gold back to around the 200-day moving average of about $2,300, in which case silver is going to continue to consolidate at that $28 to $32 level. A couple of caveats I want to mention, because the question is, the markets are never black and white, is that the dollar had a major correction in the last 12 months, coinciding with the bull market in gold. So I've been saying, I believe in your last show, that one of the indicators to looking at whether we're approaching sort of a intermediary top for the metals market is looking at where the dollar is. And the dollar right now is gone down around 8% from 110 to about 100. And 100 is a very, very strong support. It's a 10-year support level. So for the dollar to go down further below 100, that's going to really take something quite extraordinary. And I cannot think of anything. If anything, the interest rate is actually what I call it, sell on rumor, sell on rumor and buy on news for the dollar. So what I mean by that, everybody's been selling the dollar, anticipating the interest rate cuts. And now the interest rate cut has happened. So people are being selling on the rumor. And I think that they're going to, in terms of contrarian point of view, they're going to be buying the dollar on the news that the cut has already happened. And I think the room for further cuts is quite limited. Mm-hmm. And then the last caveat is, then you throw in this election cycle that's coming in. And if history is any guide, there was a very extraordinary managing of gold and silver prices in 2010 leading up to the election. So there was a major lid on the metal prices. They're starting to want any sort of breakout and have people start questioning what's going on in the financial market. So all in all, my feeling is the window for silver is narrowing and closing down. If it needs to make a run up, it needs to do so very, very quickly. And it needs to do so in defiance of a rising dollar. It's not like it's impossible. I think today's a good example. Silver is up 1% and the dollar is up. So it's not impossible. But then, in the end, if you want to do a forecast based on fundamental and technical analysis, and then you got to stick to your guns, right? You cannot just say this is the one-off and this time is different. Well, if this time is different is all the reasoning you can give it, then what's the point of doing all these analysis? So I am not so my point is silver should have been at 50 already. I'm a little bit let down on it's not. And you can see the reason on oil and base metal prices is slow down in Asia. And then gold is leading the pack and is running a bit out of steam, is a little lethargic. And so that if it's going to make a run at 44, it must well be 50. It needs to do so sooner than later, but you got this election cycle that's exerting no pressure. So I wouldn't bet the farm right now. I myself am not, but then I'm not all out of my position. I still have a big position in silver elephant. So it's never cut and dry, and the glass is sort of half full and half empty. That's my prognosis at this time.
Yep. So it sounds like the window of opportunity for a run is shrinking. But what about if you think 2 or 5 years out in the future? Do you give that any thought when you look at silver? What are your feelings for the silver prices? Maybe we go out into that time frame.
Right. Everybody has a different risk tolerance and time horizon. That's something sort of a cookie cutter template as a chartered financial analyst will give you. This adage applies especially towards the gold and silver market. So if you look at a 40-year chart from 1980 to say today, in a given 10-year, given a 10-year window, a given decade, gold and silver will probably stay at about 2 years going up, or even less than that. I mean, every average bull market for silver is about 12 months. So it was still an average about 12 months going up, or 2 years going up, 2 separate occasions, let's say. And then 3 years going down, and then 5 years of doing nothing. So, given that, again, if you look at that cup and handle formation, it's a major breakout. It's over a decade long cup and handle formation for gold and also for silver, and it's not broken out of that a neckline of 2000. And silver still covering at $30 level, which is the neckline, and it's broken out of 2,800. Usually these metals run, I can give you a lot of different reasons for that. Usually they run and they will run nonstop until the buy and exhaust. And in fact, the cartel will fuel the fire and to exhaust the buying. And cartel, the reason to do that is, as the price go up, your buying power for the number of gold, amount of gold and silver you buy is reduced. So they will try to create that top. From there, they will start picking on it some more. So I would say you don't want to be, you don't want to be riding all the way down, even if your time horizon is 5 to 10 years.
Yeah.
I would say we're within months of establishing a top for gold, and if that's the case, then I don't really have a short-term forecast for gold and silver. I would just say this gold run already reached to my expectation, but there's other factors, that are maybe a paradigm shift in the dollar reserves standards and the advent of digital currency and the ways to circumvent that. And there may be other factors out there, but I am not in the camp of the dollar's demise. It is still the king of fiats. Mm-hmm. And so I don't see the dollar. I just put it this way. I don't think the gold is going to go to the moon because the dollar is going down to the toilet. I don't see that the case. So, and if my thesis is true that gold is making a top, whether it's 2,800 or it could blow off to 35 or even 4,000, this is going to be the top that's going to be there for a while, because I don't see any other particular crazy scenarios that's going to be additional catalyst to where gold already is.
Right. As the CEO of a silver mining company, if we shift over to the general silver mining sector, do you think $30 silver, if we maintain that level and build a floor there and maybe move up from there, is that a good environment for the silver mining sector?
No.
If you're looking to buy gold, silver, or platinum, do yourself a favor and check out Pimbex, the online precious metals bullion dealer and sponsor of Ron's Basement. I was a happy customer before they offered to support the channel. You'll find they have the best prices, quality, and service. I think Pimbex is best, and you will too. And be sure to tell them that you're from Ron's Basement.
I would say, gold and gold mining company probably has done better. Gold mining company has done better than silver mining company, and certainly for copper miners. But where silver is, it really hasn't caught up inflation. And if you look at the gold to silver ratio right now, is around 83, 85. Mm-hmm. That is on the high side. The historic average is around 70. So at say a $2,600 gold at a 70 gold to silver ratio, gold should be closer to $40 and it's $30. And if you look at the quarterly financial statements of the major silver producers, they are losing money at a $30 silver, and coincided with the lack of additional investments exploration, because silver prices in the doldrum in the last 10 years. A lot of the reserves, silver miners reserves, has been depleted, and you see the First Majestic has made a major acquisition, made a very, very heavy dilution to acquire Gatto at a fairly large premium. So I think a combination of just the lack of catch up on the exploration investment to add additional resources, and also that the current silver prices hasn't really caught up with inflation, so that the miners are not delivering cash flow and dividends, show that the price has got to be quite a bit higher in the $40 to $50 range to justify silver mining companies as a mainstream type of investment. When I say mainstream, meaning people buying companies for cash flow and for dividends. But clearly, of course, investing in mining companies is a bit of art and science, meaning that you're buying people are buying silver mining companies not for the cash flow, but rather for the optionality for the ounces in the ground and for a forecast of higher silver prices, and while sacrificing a bit of dilution in depleting reserves and in some cases money losing endeavors.
So I guess I have a two-part question for you then. If the big mining companies are not making money, I would think that there is then limited investment being made into exploration, the future pipeline for silver coming onto the market. And you and I could talk, I think, for hours about the supply-demand fundamentals, the skyrocketing demand for silver from the solar panel industry, from electronics, everything else. But if the big mining companies don't have the money to invest into their future pipeline of silver ounces in the ground, at some point, does that supply-demand dynamic impact the silver price directly? And then I guess second part of my question is flow through to the development stage, exploration stage silver companies like Silver Elephant, and that those big companies are going to need to just acquire companies to plug that hole in their pipeline.
I think of the second part and the first part. I saw a bit of doom and gloom, and that's been reflected somewhat, if not fully reflected, in the current junior prices.
Right.
Even though, let's just say the likes of Silver Elephant has already doubled this year from the 25.7, 27 cent of your entry point when we talked, in the spring or early summer, but it's still around 60-70% from what it was 3 years ago in 2021. And we have Silver Elephant actually being one of the better performers in the silver junior market in 2024, and some of our peers are still way at the bottom, like historical bottom. Even we have a rebound in the silver prices. So what we discussed, a lot of that is being factored in, that there's been a bit of nonchalant response from the major companies. There's not an awful lot of acquisitions of junior company by producers because they are also trading at a very low level. And that also there is just to be a very apathy of lack of interest in the junior mining sector and even in the silver mining producers. And we also talked about management of the silver market, not only in the silver metals market, but also in the mining shares market. In a typical day, I believe some of the householding like First Majestic, probably 60-80% of the shares are algo driven. Even in the case of Silver Elephant, I know that I survey my shareholders. I know who my shareholders are. Nobody's trading, and yet you have all these people that are selling the market, which is inexplainable. And so you got all this negative factor working against it. Yeah, I mean the stock is climbing that wall of worry, and so I believe that any bit of a sort of a revise of the outlook to the upside will have a material impact on the metal price, on the mining share prices. Now go back to the supply and demand. I hold a little different view. I think I also talked to you before. My view may be slightly different from your other guests. Is that the metal prices and commodity prices, or any market for that matter, in the last 20, 30 years are almost entirely driven by speculative interest. And I think there's not a better example than looking at oil price during COVID. I mean, just because there's COVID doesn't mean that you're not using oil anymore. Albeit you drive less, but you need oil to cook, you need oil to generate electricity, you need oil for everything that you do, for the military, for everything. And yet you see oil went to negative. So you can see what oil can do on the negative side, pressured by these speculators. They could do equally as much of a damage, but equally as a bit of a numbers on the upside as well. So I really don't read the industrial demand that much. I mean, if that is the best indicator for forecasting silver prices, then Silver Institute and you can pick up any research paper would have predicted silver prices better than anybody else. But yet, they're always a bit of silver price trading is always a bit of a dart, right? Dart on the board, and you just never know which way it's going to go. Because you got all this different geopolitical factors of China and Asia, a lot of swinging investment demand. Then you got on the industrial demand, and you got the investment demand, of which you really don't know when those gold bugs is gonna rotate their gains into silver. And so you got all different factors. So I don't read. And then also on industrial demand, you talk about solar and all the different applications. If silver price were to double, then in the short term, this industrial demand will fuel the fire, because silver is a strategic critical mineral that's required for electronics and you cannot just switch off and off in the short order. So they actually will fuel the fire to secure their supply in the next 6 to 9 months. So actually buy, up in the process. But if silver prices were to be sustainably high, kind of like palladium, then platinum is going to come into play. In case of silver, there's a lot of different other metals and also technology could reduce the silver consumption. In the case of solar panel, per unit of silver gold to solar panel has gone down more than 50%. So there's a lot of different, I'm hearing there's a lot of buzz about fluorspar and a lot of different elements that could substitute conductors applications. So I never see silver industrial demand as being the major driving factor in the short and medium term for the silver prices. So rather, I'm more curious as to whether investment demand in silver is going to catch up to where gold is right now, because it certainly hasn't, right? Yep. And then hopefully the a Chinese economy will stabilize to a point where industrial demand is not going to exert a negative to the silver market.
Yeah. I want to shift gears and talk specifically about your company, because I am a shareholder. This is a sponsored video, but I'm very excited about what's going on with Silver Elephant. But I have one more question for you regarding just kind of the general silver market, and also this relates to the junior, well, the whole silver mining sector as well. How big of a factor do you think it is, or small of a factor, that both? I read the other day that the entire silver mining sector combined has a market cap of about $20 billion. And then I also just think about, if there's 1 billion ounces of silver produced every year, that's 30 billion worth of silver. And if you compare that to, the market cap of Apple Computer, it's like, 0.5% or 1%. That the fact that that both the physical metal and the mining sector as a whole are so small, that if there is any tiny shift of sentiment and money flowing into it, that a tiny amount relative money could make a major impact in those sectors.
Right. The size of the silver market and silver mining sector and mining sector in general is a blessing and it's a blessing and a curse. Right. And the reason I say that is, the wealth gap is polarized, as you know. So either people have a lot of money or they have no money. Yeah. And because of the small size of the silver market, it's just not big enough. And that's why you see this diversion of gold and silver. That's why gold to silver ratio went up over 100. It's only happened a couple of times in history. And usually that happens when there's a major war going, or major, and there's a big depression going, and just. But right now, you're looking at the equity market at all-time high. There's not any extraneous circumstances or war. There's not any fear in the market yet. Silver should have been outperforming gold by a long stretch already, like it was in 2011, post financial crisis, right? But it hasn't happened, and part of my reason, I'm scratching my head. Why is this happening? Typically silver has a correlation to the equity market because it's speculating. It is a greed game. This is not about run for the hill. If it's a run for the hill, people will not be buying silver. So there's very little speculative interest. That was just on the call with David Morgan. He said the number of subscribers for his newsletter is tepid demand. And so in short, is the market is too small for Elon Musk's, for Jeff Bezos, for the Koch brothers, for the LVMH, for Zara's, for the Dubai's, for the Middle East, just too small for the Xi Jinping's. These guys' wealth are in the tens of billions, hundreds of billions of dollars range. There's not a market for silver for them to get in. So as much they're eager to do that, there's not a way for them. The market's not able to absorb the demand, their liquidity. So that is the curse, right? But the blessing is this. And part of the reason I say investment demand drive the silver prices, just like all commodities, than industrial demand, is higher prices encourages more investment demand, whereas high prices discourage industrial demand. So Elon Musk would rather invest silver at 50 than it was at 30 because it's bigger bucket. And the fundamentals hasn't changed for silver at 50 versus the 20 or the 100. Just like Bitcoin's, the fundamental Bitcoin is not different at 60,000 versus 6,000. So you can easily make a case for a $5,000 gold or 10,000 gold just as easily as 3,000 gold, and you can easily make a case for $200 silver just as well you could for $50 silver. So I think what we need to wait and see is that it's almost like a restaurant. You gotta reach that critical mass to get more snowball.
Snowball.
We're not there. We had a 1, 2, 4, false starts already on 32, but 30 has to be overcome. You have to reach that critical mass. And once you reach that critical mass, then you're going to do the run up. And as I said, if history is any guide, the run up is going to be fast and furious. And the judges still ought to wait and see whether this run is going to happen in the next 3 to 6 months.
Yeah. Thank you, John.